Wall Street begins a holiday-shortened week on a positive note as major indices close with gains. However, consumer confidence data disappoints and falls to the lowest levels in September. Asian markets are mixed despite a strong session on Wall Street. The GIFT Nifty is indicating a flat start for our own markets as well. Crude prices edge lower as concerns over a supply surplus in 2025 and a stronger dollar continue to linger. Gold prices also edge lower, weighed down by a stronger US dollar. Good morning, you're watching Power Breakfast this Tuesday morning on CNBC TV18 in the Mumbai News Centre. I am Hormus Fatakia. Season's greetings to all of you all on the occasion of Christmas Eve. Let us first take a look at how the Asian markets have started off, and it is a quiet start to the trading day over there as well. There has been some recovery from the lower levels though. The Hang Seng is trading with gains of around 0.4%. The Taiwanese index, which was up almost 2.5-3% yesterday, is also trading with gains of close to around 0.6%. But the Japanese and the South Korean markets are seeing some bit of a subdued sort of a start to the trading day. The Nikkei is down 0.2%. The Kospi 2 is trading below the flat line, but the actual action is happening in Japan in stock-specific moves because the shares of Honda are trading with gains of over 15% this morning after they have officially announced that they are going to enter into merger talks with Nissan, and the ADR 2 ended extremely higher yesterday as well. We pull up the GIFT Nifty as well. That will give you an idea of how our own markets are likely to start off. Absolutely quiet and on expected lines too, I guess, because everybody heading into the holiday season. So it will not be a surprise if today happens to be yet another range-bound day of trade for our own markets. But it was a very good start to the holiday-shortened week on Wall Street. It was a shaky morning though, but the indices recovered from that and ended on a positive note. The Nasdaq gained over 1%, and that was led by all the components of the big tech, while the S&P 500 gained almost 0.7%. The Dow, although, ended above the flat line but underperformed the S&P and the Nasdaq. CNBC's Pipa Stevens gets us a wrap of all the action on Wall Street.
Markets rose on Monday to start a holiday-shortened trading week as strength in tech stocks continued to help the broader market. The Dow rose 67 points, the S&P was up 43 points, and the tech-heavy Nasdaq advancing 192 points. Nissan and Honda officially announced today that they are in merger talks. A deal which would also include Mitsubishi would create the world's third largest automaker by sales. They hope to complete the merger by the summer of 2026. It comes as the industry is undergoing massive changes in the shift away from fossil fuels. Honda's CEO says the companies need greater scale to compete in developing new technologies in electric vehicles and intelligent driving. And retailer Nordstrom announced it will become a private company. The company says it agreed to a buyout deal valued at roughly $6.25 billion from Nordstrom's founding family and a Mexican department store. The Nordstrom family will have majority ownership at 50.1%. Nordstrom's board unanimously approved the transaction, which is expected to close in the first half of 2025. That's what's happening here in the U.S. Back to you in Mumbai.
Well, let us also listen in to what Jefferies' chief market strategist David Zervos has to say on the markets going forward.
Historically, this Fed has not been, at least the Powell Fed, has not been that cooperative with the Trump administration. And I think we saw a little bit of jitter that might be happening frequently in the beginning of 2025 and into the end of it as well, where the Fed and the administration may not be always on an alignment path, and the market kind of got a little messy on that. I don't expect it to be like 2018. I don't think it's going to be a real fight, but I think the market doesn't like to see that, and they kind of got shades of it. And that was a bit of what happened on Wednesday. It's nice to see the PCE data come out the way it did. I was very happy with that. And I think that's really the story, is we're going to start to see much more disinflationary data in 2025, and then the debate will be over, and the Fed will be cutting, and possibly cutting far more than 2 times.
Let's also listen to what Ishwar Prasad, the professor at Cornell University, has to say on the inflation data in the US, the outlook for the economy going forward, and President-elect Trump's policy measures, and of course on the US dollar.
If I was a Fed governor, I'd be very concerned about the inflation outlook for next year, because first of all, inflation is proving to be somewhat more stubbornly persistent than we had anticipated in the US. The labor market and the economy continue to perform quite robustly. And then next year, there is a very strong prospect of action on tariffs and on immigration, which could certainly push up prices. Plus, of course, there is a possibility of an expansion of the fiscal deficit. I think we will see some tax cuts, probably not much expenditure restraint. So all of this is going to add up to a strong economy, and that is going to keep inflationary pressures strong. Trump has argued that he wants a weaker dollar in terms of value in the short run, although he wants to take action against any countries that threaten the dollar's supremacy in the long run. And oddly, the policies that he's going to put in place, such as tariffs against imports from other countries, a possible expansion of the fiscal deficit through tax cuts, all of those are going to drive up the value of the dollar in the short run. And one might argue that the fact that he's undercutting some of the institutions that keep the dollar in its place of supremacy might have a longer term effect on the dollar. But the reality is that I think his policies and weaknesses in the rest of the world are really going to keep the dollar strong in the short run. And in the long run, the lack of any real rival is going to keep the dollar quite dominant as well.
Well, that's all we have on the global market action, but how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course the setup on the FNO scheme of things as well. First up, but Vivek joins in to get all the market cues we need to watch out for. Vivek, good morning. We are heading into the holiday patch right now. It was a good session yesterday, but still some bit of worries at higher levels.
You're absolutely right. Good morning, Harmaz. Like you mentioned, a little bit of worries given the fact that the Nifty did not actually hold on to the gains. Did see selling pressure coming in at the higher levels, and especially when you're looking at the broader end of the market, the breadth was slightly muted over there. But let's have a look at the overnight cues. Once, like you mentioned at the start of the show, U.S. market strong, crude oil prices lower, Brent prices in fact now near the $72.5 a barrel mark. Now talking about the Indian markets, like you mentioned, one positive that happened was that we were on a 5-day losing streak, and yesterday Nifty managed to go ahead and snap that particular streak. Along with that, what did better and what actually gave a significant bounce was the financials pack. All of the financials that had seen a significant sell-off in the last 5 to 7 trading sessions yesterday bounced back quite sharply, and the Nifty bank was the one that actually did most of the heavy lifting as far as the markets itself were concerned. Broader markets largely in tandem with the benchmark indices, but the breadth there was slightly muted, in fact, in favor of the declines. What did well? Metal stocks did well. Any hopes of anti-dumping duty is something that bodes positive for the entire metal pack, and the entire ferrous pack yesterday did very well. Now, along with that, IT and auto stocks were the ones that did see some selling pressure. IT stocks continue to see the fall that they did after Accenture results. Now, a couple of stocks in the broad end of the markets, India Cements, Ultratech Cement, deal going through, that was quite positive. SW Solar, that was another stock that did quite well. So overall, GIFT Nifty as well as the Asian markets indicating a muted but slightly positive start for our own markets today.
Vivek, thanks a lot for that. Over to Abhishek now, who would list out the stocks that you need to keep an eye out for today. Abhishek, good morning. What's on your list?
Good morning, Homas. To begin with MSCI Electronics, the competent authority has approved capacity capability assessment for GPS location-based PAPIS. Now, PAPIS is a public address and passenger information system, if you take a look over there. Apart from that, they have, MMTC has got a warning letter from NSE and BSE due to non-holding of stakeholders relation committee in FY24. Ramki Infra has also got a warning letter from NSE and BSE on risk management committee meeting intervals. HG Infra, their arm HG Banaskanta BES has signed a battery agreement with respect to battery energy storage purchase with NTPC Vidyut Vyapar Nigam, and they have also signed an agreement for procurement of about 185 megawatt and 370 MWH on long-term basis. Now, TVS Motor, they have completed acquisition of 39.1% stake in DriveX. With this, the company now holds about 87.4% in DriveX. Now, Whirlpool, they have signed agreement with PG Electropast for contract manufacturing of Whirlpool branded semi-automatic washing machine. Bharat Forge, they will infuse about $64.5 million in their arm Bharat Forge America Incorporation. We also have a news from Money Control, wherein Tata Group has roped in Cyril Amarchand and Kotak Mahindra Capital as advisors to their 15,000 crore plus IPO of Tata Capital. Last but not the least, we have the credit card business momentum given out by RBI. So SBI card, they have lost market share massively on spends. It is down to 14.9% in November when compared to 19.5% on a YOY basis and about 15.8% on a month-on-month basis. So in absolute value, their spends or total receivables are down 19.7% YOY and about 21% on a month-on-month basis. Back to you.
Abhishek, thanks a lot for that. And apart from all of these stocks that Abhishek just highlighted, also keep an eye out on Vedanta today because it's going to trade ex-dividend. Finally, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. The 200 DMA still continues to be a bit of a headache for the bulls. What's the setup on the F&O side looking like?
Morning, Omar. That's correct. So flows remain muted, but yesterday, while we might have closed in the green, there were two negatives. First, Nifty closed off highs and failed to manage to hold on the levels above 200 DMA, that is 23,830 odd. And second, if you look at the broader markets, market breadth, despite mid-cap index closing the green, market breadth was in favor of declines. And for today, GIFT Nifty is indicating a start with minor gains. And talking about the flows, yesterday, FI sold almost rupees 170 crore, while DIs have bought more than rupees 2,200 crore. Even in the index futures, FIs have sold 644 crore, and they have reduced long positions by 675 contracts, and at the same time, they have added short positions of almost 8,000 contracts. As far as the long exposure is concerned, now FI's long exposure has reduced to less than 31%, which is lowest in almost 2 months. And on the client side, long exposure remains healthy. It's still at 65%. On the option front, 23,850 call has seen addition of more than 13 lakh shares. 23,900 call also has seen addition of more than 13 lakh shares, and on the put side, 23,500 put has seen addition of more than 33 lakh shares with premium at 25. And with these important levels for Nifty, support is now seen somewhere around 23,550 and resistance at 23,850, that is around 200 daily moving average. Now, lastly, stocks in focus. One stock that has come out of the ban is SAIL, and also keep an eye on Vedanta because it goes ex-dividend today.
Indeed. Thanks a lot for that, Sudarshan. Keep an eye out on all of these updates. Time for a short break. Up next, we take a look back at the year that was for Tamil Nadu's electronics manufacturing sector. Stay tuned. Back on the other side. Welcome back. Now, 2024 has been a year to remember for Tamil Nadu's electronics manufacturing sector. For the second year running, the state topped India's electronics export order book. Now, on Rewind 2024, CNBC TV18's Dhruv Santh revisits some of the key milestones that led to the state's electronics production boom and reports that, going by estimates, the state is set to repeat its stellar performance in 2025 as well.
For the second year running, Tamil Nadu stood out as India's top exporter of electronics goods. At $9.56 billion in FY24, the state's value of electronics exports was double than that of Karnataka and Uttar Pradesh, and the export orders it has received between April and September 2024 are already above $6 billion. In April, Tamil Nadu not only secured the pole position in electronics exports for the previous fiscal, but also registered a whopping 78% growth over its own numbers in the previous year. Incidentally, the state accounted for $9.56 billion in electronics exports out of a total national electronics export order value book of $29.12 billion. This meant that the state approximately accounted for 1 out of every 3 rupees that India earned in electronics exports through all of FY24. So it comes as no surprise that the state's electronics sector repeatedly made headlines through the year. Investments from Salcomp, Pegatron and Foxconn fructified, and as their plants commenced production, they added extra thrust to the state's export engine. And in September, American communications major Cisco launched its first Indian plant in Sriperumbudur in partnership with global electronics manufacturer Flex.
Cisco's partnership and the announcement made a huge difference, not just for Flex in India, but also in industry in itself. high technology products, highly skilled workforce, labor force, as well as the talent. And last but not the least is the manufacturing ecosystem, which means the supplier ecosystem as well.
It's this strong and fast-growing supplier ecosystem that the state government is banking on to fuel the brisk growth in electronics exports. It hopes the number will cross $12 billion in FY25, and that's just for starters.
The already existing infra will take us to 12 now, but what we are seeing is more down the value chain coming in, more components down the value chain. The entire supply chain probably, if possible, of Apple is something which we are all looking at. But the next year would be, we are looking at really bigger numbers. Right now we are at 35% of India's output, right? We would definitely want to go up.
The groundwork for this is already in place. In January, Tata Electronics announced an investment of 7,000 crore rupees towards expanding its components plant in Hosur. Further, Taiwanese electronics major Foxconn has committed 13,000 crore rupees in further investments, and US-based Jabil has promised 2,000 crore rupees. This means Tamil Nadu will soon host 4 of the biggest global suppliers of tech giant Apple, and as more come in, $12 billion in exports may be just a portion of what the state clocks in 2025. In Chennai, Dhruv Santh.
Interesting there from Jude, but time for a short break. Up next, it's time to get you Growth Code, a collaborative initiative by Grow and CNBC TV18. And our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we'll help you understand the various costs and expenses you need to be aware of as a trader.
Buy something at 100, sell it at 120, you think you've pocketed 20 rupees, right? No, that's not how it works in the stock market, because there are several other costs to consider beyond just the price of the security. First is the securities transaction tax, which is charged by the government on both sale and purchase of securities, typically at 0.1% for equity delivery and 0.025% for intraday trades. Then there is this GST, which is applicable on brokerage fees, again typically at 18%. So if your brokerage charges about 100 rupee fee, you'll have to pay an additional 18 rupees as GST itself. Then there are these exchange transaction fees, charged again typically by stock exchanges, usually a small percentage of your total transaction value. And above all of that, don't forget the brokerage fees itself. These can either be fixed or a percentage of your trade value depending on your broker. So all these costs, they add up. It's important for you to account for them when you're planning your trades.
Back with us here on Power Breakfast, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Some bit of pressure seen on crude prices ahead of the holiday.
Oh, well, absolutely. If, to begin with, it has been a negative going for the crude oil prices. But where we stand right now, and this perhaps is how the year could end as well, the Brent is down by 5.5%, and you have WTI down by 3% as well. Actually, almost everything within the energy as a space has been on the weaker side. Gasoline prices are down by 8%. Heating oil is 10% down. Coal is down 14% as well. The only thing that has been trading in the positive in this year has been the natural gas prices, up by 40% in this year. But the markets will continue to watch the potential oversupply in 2025. That continues to weigh the prices down. And then it also is about the OPEC downgrading demand estimates all the time for 2024. A bit of a rebound is, though, what we've seen come in for many of these metal prices. If you look at the copper prices, we are off 3-month lows right now. Zinc has seen some strength come into the markets as well. And then you look at the aluminum prices, we're looking at some bit of a support onto that one as well. Remember, yesterday was a good day for metals, not just underlying metals, but the equity metals seem to be doing well as well. But the street also still is looking at U.S. tariff threat on China, lack of China fiscal support, and then you also are dealing with soft U.S. PC inflation in the month of November. That continues to weigh onto the markets even now. But then it's pre-holiday thinned volumes trade, and you could be looking at a very, very narrow range.
Indeed, that's going to be the theme of the week, right? Thin volumes as we head into the holiday. Manisha, thanks a lot for that. Now, the Bangladesh government has formally asked New Delhi to hand over former Prime Minister Sheikh Hasina, who's been living in exile in India since the fall of her regime. Now, the Dhaka-based International Crimes Tribunal has issued arrest warrants for Sheikh Hasina and her ministers, accusing them of crimes against humanity and genocide. Now, the Ministry of External Affairs sources have confirmed receiving a note verbale from the Bangladesh High Commission. And to end the bulletin on a slightly somber note, one of the most influential filmmakers in Indian cinema, Shyam Benegal, passed away last evening at the age of 90. The veteran filmmaker breathed his last in Mumbai's Wockhardt Hospital, where he was undergoing treatment for chronic kidney disease. Shyam Benegal was honoured with the National Film Award for Best Feature Film in Hindi a record 7 times, and he also received the V. Shantaram Lifetime Achievement Award in 2018. Now, through his career, Benegal received numerous accolades, including the Padma Shri, the Padma Bhushan, and of course the Dada Saheb Phalke Award, which is India's highest honour in cinema. Now, his vast filmography boasts of several masterpieces, including Manthan, Zubeda, Ankur, Nishant, Mandi, that altered the course of Indian cinema. Now, Benegal's demise will mark the end of an era, leaving behind an enthralling legacy for cinema lovers.